All right, everyone, welcome back for another episode of Carnivore Trades. Today is Friday, August 2nd, 2024. If you're not done so already, please give the video a thumbs up. Like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So, did you throw yourself off a cliff yet? So, market's down 2.15% on the spiders. Q's down 2.7. Worst day since March 16th, 2020. Was it a good time to buy stocks? Maybe. We'll see. Is today going to be a good time to buy stocks? Possibly. But definitely the worst day since then. On the tape, what started it all? Well, it was the jobs number. And that came in, I think, 114 versus 176 expected. Kudos to Gordon Johnson here. And extra credit for using one of my favorite GIFs. But work-related, the hurricane, work-related jobs dropped 461,000 or accounted for that, and that's the worst on record ever. So is the market just completely missing that? It's possible. Another thing that nobody seems to care about, if you guys are macro geniuses in the comments, tell me why. We have 2 10s on inverting, but where's the 3-month 10-year? 140 basis points inversion now. It's almost making new lows here. So I don't think this is really jobs related. I think that's what they're telling. They have to have a story. I think it's just leverage short vol really blowing up. Take a look at the VIX here. 29 handle. Whew. We haven't seen that in a while. So, generally once you start getting towards that 30 handle too, you want to start buying risk assets. I know that sounds crazy because we're so close to the highs, but that's usually kind of how it works. Now, could we, have an absolute margin call Monday meltdown? Yeah, it's possible. It's certainly possible, right? There's nothing saying that can't happen. But I think it's just a lot of repricing going on here. But definitely crazy price action. I didn't have that on my bingo card this week, but 24 handle now as we're coming off the highs here. So we'll see. I think vol sellers at some point are definitely going to, of course, at some point they will come in. But we are holding right now for what it's worth, 53.25. I've been talking about that level for probably like a month almost. We just never really got to it until now. I would have preferred for bulls here. I would have preferred, move like this and then straight down without that uptick. This uptick here is what really gave bears momentum to get there. And that's probably why we're not seeing as strong of a reaction off of it. This would have been major support had we gotten here 3 days sooner. We would have seen a V shape off of that. But we're not really seeing that right now. We are getting a little uptick here at the end of the day. I'm curious here. There's a lot of things to unpack, so I'm going to be all over the place. But there was a lot of puts waiting for assignment at 530 SPY. And 535, also 450 and 445 QQQ. Where did we stop going down at the end of the day? 529, 528, 529, and 445 QQQ. And look at where we are right now, just below 550, just above 530. We've been pinned here, so maybe they've been accumulating there. The reason I say that is usually I would say, okay, when you get slammed really hard on a Friday, especially like during 2022, this is a big rule of thumb in bear markets. The market's not going to bottom on Friday. However, lately they've been catching on. Too many people have been catching on to that, and they've just been coming with the screw job. And what I mean by that is the last 2 real sell-offs we had last October and April, we just had gap and goes on Monday, and they just left everybody at the altar essentially. That's a possibility. That's definitely a possibility. Next level down, though, if we do continue selling, is going to be 53.25. Excuse me, that's where we are now, 52.25. So that's the next level I've got for this tape. But we did, right now, for at face value, we're holding 53.40 here. Market's closing in 2 minutes. So, we're getting a little bit of a bid off the close here, maybe some shorts taking profits. Apple even coming in a little bit here. Tim was cooking all day long, though. trying to help this market out. You're definitely seeing a relief bounce. Yeah, every sector I'm looking at right now is pretty much getting a relief bounce except Apple. But right now, pretty good sell. There's a technique that I use. I teach it in my course, but it's called stacking fibs. And you're going to see we went to a 236 right to the penny, basically. That's one of the reasons why I said 5,300 area would be support. But another reason for that is if we just take the fib right here to the April low, you can see we hit a 50% fib retrace today. So you got two fibs from two different major pivots lining up. Market's bouncing, right? So does that follow through Monday? We'll see. But right now, you got to clear really the high of the day to even have a shot of really getting a squeeze. And then after that, 5,400. So you reclaim those lows, then all bets are off. But right now, and look at this, they're going to take us, market's closing in 1 second. Look at what these guys do every time. 53.50, put Gex. Those Gamma boys, man. All right, so 53.46 closing price. So support held, but very, very good price action for sellers here. And like I said yesterday, this is the best bear move I've seen since 2022. And the reason I said that is not because of the price or how much we went down. It was the price action. And I'll show you here. Let's use the futures. I think it's a lot easier to see. So we had a 618, right? Well, okay. The cash S&P hit a 618 perfectly. But I like the futures look because you'll see why in a second. It was the force of that rejection of how we had such a powerful move the day before, and then it rejected like we were in a bear market. And I'll show you here in 2022. There was a couple of instances like that. Right here, we had that big uptick and then down. Right here, this was an FOMC day, by the way, and right down the next day. It was that real decisive rejection. So definitely a good bear move, but also bulls coming off the lows here. Let me know in the comments if you're buying the dip. So 100 MA holding by the end of the week. They always make it difficult. And by the way, let's look at the weekly too, because everybody's doing swan dives right now. But if we gap and go Monday, it's just going to be another weekly 20 MA test. So be aware of that too. But right now, sellers in control. And I did not see a V-shaped bottom today. But we'll see how this carries over into Monday. So interesting stuff here. Triple Qs here. Again, also going to some support as well. Previous all-time high, 448.64. Test candle with volume behind it, right? So that was the May 31st low. And we held by the end of the day. You're also going to see here another fib retrace, 618, held on tech. If we go to the October low, you can also stack that fib to a 382, which almost hit. I mean, we can call that a kiss. IWM here, bloodbath, down 3.5. 2 days ago, it was at 52-week highs. Actually, multi-year highs. This should not have a lot of downside here over the next 2 to 3 days. It's going to have to consolidate if it wants to go lower. But that said, look at that weekly candle. Vicious rejection. This has done this before too. So here's your bear porn for the day. Down move, bear flag, tries to break out 2008. Back in 2018, down move, kind of a big bear flag, tries to break out. COVID dump. All right, that's enough of that crap. All right, diamond here, down 1.5. There is support at 395. I think that holds here. I want to talk about the SOX first before the SMH because we did hit the 200. And we also hit the 50% fib. So big level there for the SOX. Straight into it with no bounces. That should be major support. Same thing with the SMH, although not quite to the 200 MA. Remember, this is very skewed towards NVIDIA. And then there's your 50% fib. So if we do flush out a little bit on Monday, I think this is massive support for the SMH. And if the SMH bounces, everything's going to bounce. IGV down 3 1/3. What a dump here. So I extended this old trend line out. That was the failed head and shoulders, remember? And look where it went, right there, and then bounced. But everything getting hit today. Transport's getting hit. They came off the lows. They held this trend line by the end of the day, but not a good candle. Not good price action the last 2 days. Any way you slice it. All right. Back to rates here. 2-year down 26 basis points. And we are down, I think, who is it? Yeah, 441. So that's 50 basis points here in a couple days in the 2-year. That's a massive move. 5-year down to 3.6. The one thing I want to say with long end rates, I'm still not buying them going down for longer. I'm not saying they can't have sell-offs. I'm not saying the TLT can't rally, but I do believe inflation is structurally embedded. There is support at 3.7 here in the short term. And I just want to remind everyone, remember what everybody said back in April of 2023? Oh, that's it. 10-year yield's going back to 2. It's going back to 1. It's going to 0. The Fed's going to do, and then it went to 5. Don't forget about that. There's structural inflationary pressures that are now in place here. So I think the most likely scenario is stagflation. That doesn't mean TLT won't or can't rally. It already got a really nice bid here. Bull's holding up really well here, and a good pattern too. You see the 30-year obviously coming in, but I do think there's floors in long end rates though, even if cuts do come. Just my take on the matter here. XHB. Oh, and by the way, rates coming down just means that Congress can spend more. So that's also kind of a tug and pull here. XHB, look how strong this is. I mean, it was down today, but it closed above the 20 MA. This is still so strong here. Even with that sell, we held the green bar low here by the end of the day. Good reversal on the weekly, but, again, still above all the moving averages. So home builder's still strong. And look at how strong VNQ was. It only finished down 5 cents. So commercial real estate's the new safe haven here, I guess. Speaking of safe havens, gap and crap in XLU, though it did close up green. Same thing with XLP, though it closed back up. It actually held up by the end of the day. XLV, gap and crap, but again, it bounced up by the end of the day too. I think if you were looking for a defensive trade, you're late. You're too late. You should have been getting into that a while ago. Even gold here had a gap and crap today. A lot of this, I think, is, if I'm correct about margin selling, you're going to see that in gold here, right? Why do you own gold? You own it as for a rainy day, right? And when you get margin called, that's a rainy day. And what do you do when you get margin called? You sell your winners, right? Well, is gold a winner? Well, it has to be, because it's at all-time highs. So everybody who's bought it has made money, right? So I think that could be part of it too. But I also think partly, dude, I think if you're waiting for the jobs number to confirm your bias on payrolls, this like smart money, was buying XLP. They were buying all the way up here, Now you're trying to chase the gap. I think it's a little late, personally. Anyway, XLF down 2.4, good slice there. Found some support at the 50 MA. Good volume though. Held the 42 handle. Again, still above the 20 MA on the weekly. But very good outside move. Wiped out the last 2 to 2.5 weeks. KRE down as well. Didn't build any support on the way up. That's a problem, but there is a lot of room for higher lows if it wants. And the same thing with the KBE. Broker dealers finally getting sliced here. This has just been a long time coming. It's just been in such a strong uptrend for a long time. I've been telling you it's extended on the monthly, but they can take time to play out. And maybe that's playing now. Some of these houses, maybe they're just leveraged short vol a little too much. So a pretty good hit there. Oil down 3. It did hit the 786. And it's bouncing. Again, I have no interest in trading oil at the moment. Again, if you're waiting for this recession talk to trade it and short it, you're late. You had to do it up here. XLE taking a big hit. No damage on this yet, because we still have a higher low or a double bottom. I do want to talk about Exxon though. their PE is 8.8 now. I think this is kind of attractive. I don't talk about single tickers that often in energy, but this is holding up really well. I love the pattern on the monthly. I'm almost considering just tucking some shares away, honestly, at this point. But I do like energy. I think it's going to be a big contrarian trade. I know that hedge funds are really short energy, and I don't know if I'd want to be mega short anything right now, given where the market is, if this market finds a low, but especially energy, given where their multiples are. XOP did do damage as we broke that low. But overall, again, zooming out, again, we're in a big supply zone here. It's going to take a while to chew through that. And I think if that gets done, it goes a lot higher. The same thing with OIH, as you guys know. Perspective, right? Looks really bad here, but we put our old other trend lines up, and we're just inside of that wedge now. Okay. So interesting, some thoughts there. CCJ, hope you guys stopped out when I told you to, but you're into the head and shoulders target. That's now completed. There is support here. So there is some support here. Might go a little bit lower, but that is now completed the target. And same thing with the NM. Hopefully everybody now knows why I say, like, you don't want to see that green bar go, because now it's back down into, you know, the high 30s. And NM and NJ, same thing. Support around 18 right now. Nat gas, who cares? New lows, it's down off the lows. It's basically flat on the day. I don't think it's going to go too much lower from here. As we get into the fall, it's usually a good buying season there. But yeah, who cares? Seriously. All right. Dollar index down 1.7. It's failed weekly inside bar now. However, that same exact inside bar happens to be a monthly. So there's always a catch, right? 103.88. So we have a whole month for that to get saved. But dollar right now definitely doing damage. No way no way around that. I think it is outside of that wedge too. So dollar getting hit really hard. I'd just say next level. We'll just say 102.85, 102.75. Gold here, we talked about it briefly. It's holding up fine. Silver actually holding up okay. It actually was flat in a really weak tape. A tape where it should have gotten hit. So there's things that, again, going back to the 3-month 10-year, if we're really going, maybe this is a bold call, but if we're really going to recession, why is the 3-month 10-year inverting further? Why was, the jobs number really that skewed? And why is copper green today? So I don't know. That's why I don't really follow financial narratives. I follow them to fade them. But there's, there's a lot of questions. But in any case, silver down 3.74, SIL down 3.74. So the miners were hit, the metals held up. Platinum here hit the 618, rejected that trend line there, needs a higher low to get through that. Palladium acted like nothing happened today. And then copper here, like I said, up 1%. I think it's close to a low, but you are bear flagging right now. So Bitcoin down about 3.5%, but again, that's like an hourly candle for Bitcoin. So you have to take that into consideration. You do want it to be above 63.3 though on a daily closing basis. Otherwise, we could head lower. And if we do head lower, again, it's really not the end of the world. It's still just a big weekly consolidation pattern for another move higher. That's my opinion. So in any case, let me know in the comments if you bought the dip or you panic sold everything. Little pop off the lows by the end of the day. We'll see. Monday will be the moment of truth. It could really go either way at this point, but next support is around 52.25. VIX did come in by the end of the day down, like $5-6 off the highs, so 23.59, but definitely the best bear move we've had in a while. Bull still above the weekly 20 MA though for now, and next week I think will tell us a lot more. A lot less data next week. We don't have all these ridiculous volatility events, jobs, the Fed pulling us in every other direction. So a little bit more of a free price action. But good action for traders this week. And again, 5,300 holding by the end of the week. So bulls at least defending where they were supposed to, but bears still in control until 5,400 reclaims. So anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I will see you guys all next week.